The world of finance is changing. Traditional financial systems, which have been the backbone of global economies for centuries, are now facing unprecedented challenges and transformations. A new player has emerged, challenging traditional notions of money and finance. This player is not a new bank or a financial institution, but a digital entity that operates in a realm beyond physical borders. This player is Bitcoin, a digital currency that has captivated the attention of investors, governments, and everyday people alike. Bitcoin is not just another form of currency, it represents a paradigm shift in how we think about and use money. Bitcoin is not like the dollars or euros we carry in our wallets. It doesn't exist in a physical form that you can touch or feel. Instead, it exists only in the digital realm, a series of ones and zeros that hold value in a new and innovative way. It is secured by cryptography, a complex and highly secure method of encoding information. This cryptographic security ensures that Bitcoin transactions are safe and tamper-proof. Moreover, Bitcoin operates on a decentralized network known as the blockchain, which is a public ledger that records all transactions. Bitcoin's rise has been nothing short of meteoric. From its inception in 2009 by the mysterious figure known as Satoshi Nakamoto, Bitcoin has grown from a niche experiment to a global phenomenon. Its value has skyrocketed, attracting both fervent supporters and skeptical critics. From its humble beginnings as a niche experiment, it has exploded in value and popularity. Early adopters who mined or bought Bitcoin for pennies are now millionaires, and Bitcoin conferences draw large crowds eager to learn more about this revolutionary technology. Bitcoin has become a global phenomenon, sparking debate and discussion across the world. It has transcended borders and cultures, becoming a topic of interest in both developed and developing nations. People from all walks of life are intrigued by its potential to change the financial landscape. Its proponents hail it as the future of money, a revolutionary technology that will democratize finance. They argue that Bitcoin can provide financial services to the unbanked, reduce transaction fees, and offer a hedge against inflation. Its critics dismiss it as a speculative bubble, a risky investment with no intrinsic value. They point to its price volatility, regulatory uncertainties, and the potential for misuse in illegal activities as significant drawbacks. Whether you are a seasoned investor or a curious newcomer, understanding Bitcoin is essential in today's rapidly evolving financial landscape. The more you know about Bitcoin, the better equipped you will be to make informed decisions about its role in your financial future. This essay will serve as your guide to the world of Bitcoin. We will delve into its history, explore its underlying technology, and examine its potential impact on the global economy. By understanding the fundamentals of Bitcoin, you will gain insights into why it has become such a significant force in the financial world. We will delve into its history, explore its underlying technology, and examine its potential impact on the global economy. From its creation by Satoshi Nakamoto to its current status as a major player in the financial markets, we will cover the key milestones in Bitcoin's journey. By the end of this journey, you will have a firm grasp of what Bitcoin is, how it works, and why it matters. You will understand the principles of blockchain technology, the significance of decentralization, and the reasons behind Bitcoin's volatile price movements. You will be equipped with the knowledge to navigate the exciting and sometimes confusing world of digital currencies. Whether you decide to invest in Bitcoin, use it for transactions, or simply stay informed about its developments, this knowledge will be invaluable. So, buckle up and prepare to explore the fascinating world of Bitcoin. This journey will take you through the highs and lows, the promises and pitfalls, and the ongoing evolution of a new kind of money that is reshaping the future of finance. The story of Bitcoin begins in the aftermath of the 2008 financial crisis. This was a time of great uncertainty and turmoil in the global financial markets. The collapse of major financial institutions sent shockwaves through economies worldwide, leaving millions of people grappling with the consequences. The world watched as banks teetered on the brink of collapse, their stability undermined by risky financial practices and a lack of transparency. The stock markets plummeted, wiping out trillions of dollars in wealth and eroding public trust in the financial system. Bailed out by governments using taxpayer money, these bailouts were controversial, sparking widespread anger and protests. People were outraged that their hard-earned money was being used to rescue the very institutions that had caused the crisis. This financial meltdown exposed the fragility of the centralized financial system. It became clear that the existing financial infrastructure was vulnerable to systemic risks and prone to catastrophic failures. The crisis highlighted the need for a more resilient and transparent financial system. It planted the seeds for a decentralized alternative, free from government control and manipulation. Visionaries and technologists began to explore the possibilities of creating a new kind of financial system, one that would be immune to the flaws of traditional banking. In 2008, a mysterious figure, or group of individuals, using the pseudonym Satoshi Nakamoto, published a white paper that would change the world. This document outlined a revolutionary concept that promised to transform the way we think about money and transactions. This white paper, titled Bitcoin, a peer-to-peer electronic cash system, laid out the blueprint for a revolutionary new digital currency. It described a system where transactions could be conducted directly between parties without the need for intermediaries. This currency, Bitcoin, would operate on a decentralized network called the blockchain. The blockchain is a distributed ledger that records all transactions across a network of computers, ensuring transparency and security. Nakamoto's vision was clear: to create a digital currency that would empower individuals. By removing the need for central authorities, Bitcoin aimed to give people control over their own money and financial transactions. Bitcoin would allow people to transact directly with each other, without the need for intermediaries like banks. This peer-to-peer system promised to reduce transaction costs and increase financial inclusion, especially for those without access to traditional banking services. It would be secure, transparent, and resistant to censorship. The decentralized nature of the blockchain meant that no single entity could control or manipulate the system, ensuring the integrity and fairness of transactions. On January 3, 2009, the first Bitcoin block was mined, and the Bitcoin network was born. This event, known as the Genesis block, marked the beginning of a new era in digital finance. This marked the beginning of a new era in finance, the era of decentralized digital currencies. Bitcoin's creation was a significant milestone, representing a shift towards a more open and inclusive financial system. Bitcoin's creation was a watershed moment, a testament to the power of cryptography and the potential of decentralized technologies. It demonstrated that it was possible to create a secure and efficient financial system without relying on traditional institutions. As Bitcoin gained traction, it inspired a wave of innovation in the world of digital currencies and blockchain technology, paving the way for a future where financial power is more evenly distributed. To understand Bitcoin, one must first understand the blockchain, the revolutionary technology that underpins it. Blockchain is not just a buzzword, it is a groundbreaking innovation that has the potential to transform various industries beyond just finance. The blockchain is essentially a digital ledger, a record of all Bitcoin transactions that have ever taken place. This ledger is meticulously maintained and updated by a network of computers, ensuring accuracy and transparency. Imagine a giant public book where every Bitcoin transaction is recorded for everyone to see. This transparency is one of the key features that make blockchain technology so revolutionary. This ledger is not stored in a single location, like a bank's database. Traditional financial systems rely on centralized databases, which can be vulnerable to hacking and fraud. Instead, it is distributed across a vast network of computers, known as nodes. This decentralization makes the blockchain incredibly secure and resilient against attacks. Each node on the network has a copy of the blockchain. This means that even if one node fails or is compromised, the integrity of the blockchain remains intact. When a new transaction occurs, it is broadcast to the entire network. This ensures that all nodes are aware of the transaction and can work together to verify it. The nodes then verify the transaction, ensuring that the sender has sufficient funds and that the transaction is legitimate. This verification process is crucial for maintaining the trust and security of the blockchain. Once verified, the transaction is grouped together with other transactions into a block. This block is like a page in our giant public book, containing a list of recent transactions. This block is then added to the blockchain, becoming a permanent part of the ledger. Each new block strengthens the blockchain, making it more secure and reliable. The blockchain is constantly growing as new blocks are added. This continuous growth is a testament to the dynamic and ever-evolving nature of blockchain technology. Each block is linked to the previous block, creating a chain of blocks, hence the name blockchain. This linking process ensures that the entire blockchain is interconnected and tamper-proof. This chain of blocks ensures the integrity and immutability of the ledger. Once a block is added, it cannot be altered, providing a permanent and unchangeable record of transactions. Once a transaction is added to the blockchain, it cannot be altered or reversed. This immutability is one of the key features that make blockchain technology so secure and trustworthy. It ensures that all transactions are final and cannot be tampered with, providing a high level of security and trust for users. Beyond Bitcoin, blockchain technology is being explored and implemented in various industries. From supply chain management to healthcare, the potential applications are vast and transformative. One of the most exciting applications of blockchain is the use of smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. They automatically execute and enforce the terms of the contract when certain conditions are met. Blockchain is also being explored for secure voting systems. By using blockchain, we can create a transparent and tamper-proof voting system that ensures the integrity of the electoral process. Digital identity verification is another promising application. Blockchain can provide a secure and private way to verify identities, reducing the risk of identity theft and fraud. Decentralized finance, or DeFi, is a rapidly growing sector that leverages blockchain technology to create financial products and services that are open, transparent, and accessible to everyone. As blockchain technology continues to evolve, we can expect to see even more innovative applications and use cases. The possibilities are endless, and the future of blockchain is incredibly exciting. In conclusion, blockchain is the digital backbone of Bitcoin and has the potential to revolutionize various industries. Its decentralized, transparent, and secure nature makes it a powerful tool for creating a more trustworthy and efficient digital world.